Welcome to an update for the Federal Milk Marketing Order number 33. This is Dr. Lawrence Jones, and I'm recording this on 16th of February. And I'd like to thank Nobis Agri Science for sponsoring this podcast. I always like to start with the milk checks that you guys are getting. So here is our statistical uniform price for January, and it was $17.90. That was down about 30 cents from December. And if we look at how these compare over time, so we're right on the top of the 2019 kind of numbers. Now, I know inflation has changed a lot of the different costs associated with dairy, but again, that gives us a sense of where we are. And that's $7.88 off of this peak that we had back here in the middle of 2022. So we need to compare yours change as to how the rest of the country changed. And again, what's going to impact this is, how your order uses different classes, and then whether your order did any depooling. And again, whenever there's more than about 75 cents between class 3 and class 4, there's a significant depooling. And so right now, there'd be no reason if your order allowed it to have class 4 into the pool. Overall, prices changed by about 55 cents down. I said yours were minus 30. The biggest one would have been Minnesota, Wisconsin at down 81 cents because they're a very heavy class 3. The Southeast, which is heavy class 1, weren't down quite as much here. So if we look at the futures for class 3 and class 4, there's a huge difference here. So we're going to be depooling for quite a while, so we're going to expect that. That brings up another issue. It's the class 1 mover, and so this would suggest that the higher of is a better class 1 mover than the average plus 74 cents. But I've been asking people a couple questions on this before we run headlong into that decision. Is the price of class 1 milk inelastic or not? And if we go to the higher of, we're going to increase the price of class 1, and is that going to hurt demand at all? Just questions to ponder. So if we look at your class 4 capacity in order 33, there was only about 2 million pounds a day going into class 4, and we've been as high as almost 12 million pounds a day. So again, significantly depooled. All that just means it goes to a plant that doesn't send the money to the pool. It sends the money right back to the co-op, and then you should be getting a depooling check. I like to look at the class 3 just to see what's happened to the different cheese plants. We were back here about 19 million. We jumped up here to about 23, 24. That's a new cheese plant. We're off a little bit right now. So these cheese plants must not be running at the full capacity. Now, I've been accused of being anti-new cheese plants, and I consider it kind of like having a boat. You buy your boat, and they said that would be great, and they said it would be fun, but the reality of it, usually the second happiest day of a boat owner is the day they sell the boat. The problem with these new cheese plants is if we don't have a market for the cheese, it's just going to suppress the cheese prices overall. And Jacoby had a really nice podcast, their Milk Check podcast, just a little while ago. If you don't get that, let me know. I can forward it to you guys. But there is just this interesting dynamic going on between cheese plants, butter plants, and class 1 plants. Right now, class 1 was up in the federal orders by about 2%. And so that means that had to pull milk from either the cheese plants or the butter plants. Now, right in the middle of this is the milk supply. So if we've got a slightly declining milk supply, how does that all come into this dynamic? And then overall, that dynamic is disappearance. And so if we don't offset the increased production of cheese with disappearance, that means we're going to grow cold storage, and the same thing with butter. So the sense right now, what we're hearing, for the next year or so, as these cheese plants come online, which, by the way, we're going to increase capacity like 4.5%, which is crazy. But we're probably going to have lower cheese prices with higher premiums. Again, they're going to be competing for this milk to get it away from the butter plants. But if the price of cheese goes down, the only way they can actually get that milk is with higher premiums. Butter prices are probably going to remain relatively high because we have a fairly good disappearance and they're going to be struggling to get milk away from the cheese plants. Non-fat dry milk is probably going to remain a bit lower until exports improve, and I'll try to build this story out for you as we go forward here. This is the relative value of butter and non-fat dry milk. If you take 100 pounds of class 4 milk and you make butter and non-fat dry milk in a butter powder plant, the butter is of a higher value, and that actually changed back here, probably Q3 of 2022. Now, I do not expect that to go back up to, $5 over. That was just a spike. And so if you kind of look through here and say, well, that's more of the average number, then you start kind of thinking, well, maybe butter is going to be around $2.75, maybe non-fat dry milk around $1.20, which gives us about a 1950 class 4. And so that's kind of my assessment of the class 4 butter powder plants at the moment. Fat prices were very strong across the country. They came up a little bit last month, I think 4.31. You were 4.29. We'll look at that in more. Northwest at 456, Florida at 397. It kind of brackets all of that. And here is the order 33. You guys are crazy at 4.29. That came up from 411. Significant increase in percent fat in the milk. And that's not surprising. Here is the weekly National Dairy Sales Report prices for fat. And so we've been as high as, $3.75. I don't expect that again. Kind of $3 is the number that I've got in my mind. But really, historically, anything over $2 was really, really good. But we're clear up to $3. So I know you guys are going to just continue making more fat if you can. And here are fat future prices. This has it going up to 331. I don't know if I think it's going to go up quite like that or not. But there's a huge question mark out here, because if you go back last year, we had the same deal where it dropped off at the end of the year. And everybody knows what we did here this last January. We just didn't have a collapsing fat price. It was actually very good. And so I put a real question mark in these future prices out here in Q4. Protein is still relatively strong. We don't have that in all the regions. 351 in the Northwest, 332 in order 33, and of course you guys are always higher than we are in New York at 327. But you guys did come up another 500s compared to last year. So you're 332, where last year were 327. So again, very strong components. But protein is pretty well flattened out here, and it's hard to raise protein. I mean, I acknowledge that, but it's still very good. And here are protein prices. And if we look at this, I think we've just been on this absolute downward trend, somewhere end of 2021, beginning of 2022, somewhere in here. This has just been on a downward trend. This is food box pandemic stuff. But again, if you look back historically, somewhere in that $3 range is kind of where we think protein ought to be, but we've just been collapsing that. And here is our protein futures. Even through the rest of 2024, we're not going to be over $2. So this is cheese is very much on the downward trend here. So I often just kind of give you an idea of some things that we've been doing for trading milk, and I think this is going to build an interesting story for you. So again, back in October, we said we sold some January 1875 calls for 50 cents. That would have been up in here. And where did January end up? January ended up at 15.17, so that call was, perfect. It generated 50 cents a hundredweight. We talked about these April calls, $18 for 50 cents. This has been a bit of a problem child, because again, that's in here. That means they're good up to 18.50. That's the bandwidth that we have. Now we're down to 17.17, but this did push 18 a little bit. So back in here, this is where we talk about active versus passive traders. So we were buying the contracts back a little bit just to provide a little bit of protection, but then we released those once we started in this downward trend again. So recently we sold some 1850 May calls. So if we look at May, 1850 is up here for 55 cents. And I have to admit I even got a little piggish and I sold some $18 calls the other day for 60 cents. And the question is, why has this been working for Larry? And I want to show you something that's interesting. I don't usually try to copyright data, but this is, I think, is pretty significant. So if we go back to September of 22, and then we simply ask, what was the contract 6 months earlier? So this is what I call a 6-month carry. It turns out for the last 18 months, the average has been $2.34 drop from 6 months out to close. And so there have been some that has been as high as $6 down, but this is definitely saying this is a bit of a bear market, and that's why when we reach out there 2-3 months and sell a call above where the market is, that's why we've been winning. And so this has been a winning strategy basically since September of 22. There's no guarantee that this is going to continue on in the future, but I'm going to start tracking this relatively close, because I think once this starts being a positive number, that's going to say that the market is starting into a bull market, but right now it's very much in a bear market. Move to calling data, we are up to 60,000 a week. We hadn't been at 60,000 for quite a while. I like to look at this as a call rate, 32 to 34%, using the cow numbers that USDA gave us. Big downward trend. So are we going to see an increase in cows this next month? I think it all depends on kind of what's happening with the heifer numbers and heifer availability, because I know you're hearing that they are very expensive. And I didn't put a slide in here, but normally I put a slide in that says the reason that heifers are expensive has got nothing to do with milk price. It's got everything to do with beef price. Take a look at the global market. We've had, session over session increase in the global dairy trade. Here is our spot market, as of yesterday. Seems like we ought to be exporting a bunch of cheddar at 203 on the world market, $1.49, but boy, we don't seem to be. The non-fat dry milk, I usually consider 20 cents to get it offshore. We're just about a little bit better than 20 cents at this point. Whole milk powders giving us a world price of $15.72. And if you look how like cheddar increased and butter increased, it would have increased our prices by $1.43, but the market just ignored this totally. Partly because we look at the dairy exports. This is December compared to the dairy production in December. Cheese 6.65%. We just can't get that over 7%. Down to the prior year. We just cannot seem to export cheese. Butter's 2.25. Down quite a bit, and probably the imports are closer to 3, so we're just not exporting much at all. When we got the dairy products report, I like to look at a rolling disappearance. This kind of gives me an idea of for cheese. Right now this is flat, absolutely flat. We had a flat portion back in here, but we have just flattened out demand. Demand is just not growing at this point. It turns out in December we produced about 39 million pounds of cheese a day, and our demand is about 38.6. So we're making more cheese than we are disappearing at this point. Looks like we've got about 37.5 days of excess cheese in cold storage. And that has not changed off of that number quite a while. So I think the industry just says, we'll hold 37 days after that. We're just going to get rid of it. Cow numbers are an interesting subject. USDA has been declining cows. We're at 9.36 million. So if you just put this back, this is kind of where we were in the middle of 2020. At the beginning of 2019, these were good prices. These are bad prices. But I actually consider this graph to be absolutely irrelevant anymore. And the reason is you guys are increasing milk per cow by almost 1% per year. This is the December milk per cow in the red dots. And again, when milk per cow is all cows, so that includes the dry cows in the USDA numbers. But we're just increasing at a phenomenal rate. So we don't need as many cows as we had back here, for example, in 2016, because we've increased almost 6 pounds a cow. And if we look at fat percent, the milk that we're making is higher percentage. I mean, that's increasing at 1.2% per year. So cow numbers are slowly becoming insignificant. Yes, we can't drop off a pile of them. I know that, but when we compare them back, I don't think they're at all correct. Now, another subject on this. This is a real problem for cheesemakers. I didn't really realize this until T.C. Jacoby was kind of pointing it out, that they take this high fat milk, and what they've got to do right now is add non-fat dry milk to it to standardize it back down to a percentage that they want for the cheese. That's going to put these cheese plants into a heck of a squeeze if non-fat dry milk all of a sudden becomes expensive. Right now it's cheap, and so it's very easy to take this milk, add non-fat dry milk to it, standardize it, and make more cheese. Otherwise, they're going to have to start skimming off the cream, and then that becomes a whole new enterprise. So how is milk production going to change? This is kind of an interesting graph. This is the federal milk marketing order for January versus December. And then again, this is more of a guide of plants, not dairies. When you guys are up about 10%, I think milk was actually moving from Minnesota, Wisconsin into Michigan. They're down about 3%. And so again, what's happening is milk can move. We've seen that from time to time when milk moved out of the Northeast into the Southeast. USDA numbers generally, this January over December, are up about 2%. When you look, these numbers adjusted for milk, it's about 2%. So again, doesn't take a blind squirrel to say Larry's going to guess that we're going to increase milk 2% month over month, which means we're going to be about 0.5% down year over year if we take this number and project it back. The spot market is our closest price discovery. So right now, spot cheese is in just a free fall, and I am really hoping that we can build support where we had it before. But if we can't, if that busts through that support number, I mean, we're talking clear down here $1.40 again. You know, right now we're $1.50 something, but it's going to be interesting this next couple of days is what happens to the spot market. The way you read these graphs, the red dots are the spot market, the blue dots are the National Dairy Sales Report, the green dots are my predictions, so you can ignore almost all of that. But what this is saying is that on the spot market, whey has just been moving up. So we've added about 7 cents from where we were back a couple weeks ago. A good rule of thumb is you take that 7 cents by 6 cents per pound. So that means we've probably added about 40 cents, 42 cents to the class 3 price with this whey price coming up. Same deal with this. Butter has just been increasing from that, you know, 260 basically to this 270, 275 number. And so butter has been fairly strong. Non-fat dry milk is in a free fall. It's fallen for the last probably 8 or 9 sessions. The blue dots are the global dairy trade. I have 20 cents down because that's kind of the max that we get to sometimes. You know, 10 to 15 is probably what it takes to get it offshore. But we're headed down now to the bottom of that global dairy trade minus 20. So again, just come back to this. I think this is what's driving everything. And I think this is what you want to keep in mind relative to milk prices, you know, in the future here. And keep an eye on these premiums. If you're in an area that's got butter plants as well as cheese plants, you know, there's going to be a significant increase in overclass prices of milk, and the co-ops are going to have to be giving you more premiums. But again, it all depends on what happens with milk supply. So the other side of the ledger are the grains. So these just been in a kind of a lot of pressure. I thought corn would hang in at $1.75 a ton, and it's really pushed off that almost $10 at this point. There's just no news until we get the safrinha crop kind of figured out in Brazil and we get our planting going on here. There's just absolutely no news. So this is probably going to, you know, trend sideways. But even Eric Snodgrass is making comments about the dry weather in Brazil, and so this might have some upward pressure to it. Soybean meal is kind of the same thing right now. Brazil and its harvest, there's just a lot of soybean meal around. This broke out of this 370 trend. I mean, we were way off there now. It's like 345. Again, I thought that this would go up, as did a lot of people, but there's just too much pressure on harvest in Brazil and really a reduction in demand. Now, a lot of people are arguing that we're in the middle of the Chinese New Year, and so in fact there have been no big orders from China, which is going to end here in 2 days, and so we might see an uptick in exports. Just a few things to close out here. This is the root zone. It looks like western Michigan as well as Ohio, Indiana, all these areas are still a little bit deficit, but the eastern and particularly the thumb area looks like that they're starting to get the moisture back into there. And the spring is going to be an interesting time because these lakes just are not frozen, and so it's the effect of the lake on delaying spring on the east side of the lakes is probably going to be reduced this year. Now that doesn't mean you're going to have an early spring. It just says that the impact of the wind coming across the lake and getting cool is going to be gone because they're basically ice-free at this point. And I didn't put anything in, but again, right now we're looking at the subtropical jet just bringing a lot of moisture from the southwest into the northeast. So looks like the spring could be fairly dynamic and a lot of rain with small planting windows. All right, that's it for me. I hope this helped you kind of understand what's going on in the industry, and I'll get you another report next month.